Good evening to you, fellow students. I hope you are all doing well. And today I'd like to do this short video to explain these few questions for you. So today our agenda is basically on management accounting, and I'll not waste much time here. Just to give you a brief explanation, so that when we meet on face to face, I can go into details to explain it for you. You have here question 1 that states that. So we have question 1 here that states that Girls Limited produces and sells industrial oil in gallons using a simple process. It provided you with the following information. So you have the product data for the month of December 2015, and that is it in the table over there. Then you have the footnote over there telling you that output changes by 2,000 gallons. Any change of 2,000 gallons causes changes in the fixed labor cost by 2,000 and production overheads by 4,000 in the same direction. This particular note or this particular footnote attached to the table is very, very important, and failure to recognize that particular footnote will render your work wrong, or you are not going to score the mark, or you end up confusing yourself. The understanding of these two lines over there is very, very critical, and you must always pay attention to it when it comes to flexible budgeting. Now, you can be asked a question that what type of budget has been presented to you. This type of budget is a fixed budget. When we talk of a fixed budget, it is a type of budget that the budgeted output is different from what? The actual output. So by just looking at the unit produced, you can tell that this budget is a fixed budget. So a fixed budget, as I was saying, is a budget that the actual output is different from the budgeted output. That is a fixed budget. Now, the first question here is telling that you should determine the budgeted and actual contribution per barrel, showing the various cost elements. And you know that contribution is giving us a selling price minus a variable cost per unit. So when you look at this particular question, the selling price has not been given, but they give you the sales for the year or for the month. So when you divide the sales by the total units produced, you get, so the sales here divided by the total unit produced here, you get your selling price per unit. So sales divided by the quantity, you get selling price to be 30. Sales divided by the quantity, you get selling price here to be 36. So budgeted selling price is 30. Actual selling price is 36. Then your variable cost. Your direct material cost in the question is 200,000. So you divide the 200,000 by the 20,000. Direct material cost is 10,000. Direct labor cost in the question is 50,000. Divided by the 20,000, you get 2.5. Production overheads is 180,000. Divided by the 20,000, you get 9. Bear in mind, we are looking for variable cost, so you are not interested in the fixed cost. Selling and distribution, 20,000 divided by 20,000, you get 1. So the other fixed cost does not come in over here. So your total variable cost budgeted is 22.5. Subtracted from the 30, you get 7.5 contribution per unit. When you come to that of the actual, the direct material cost is 216. So we take the 216 divided by the 18,000, you get 12. Then you get to direct labor. The question was telling you that output changes by 2,000 barrels. When they say a change can be increase, a change can be decrease. So your duty is to go and look at the question and look at the output. Budgeted output was 20,000, meaning we budgeted to produce 20,000. But how much did we end up producing? We end up producing 18,000, meaning there was a decrease. There has been a change, and the change here is a decrease. So here output has changed, or output has reduced by 2,000. And they were telling you that any change in output causes a change in the direct labor by 2,000 and in the production overhead by 4,000 in the same direction. So if output is increasing, then labor must also increase. Fixed labor cost must increase by 2,000. Fixed production overheads must also increase by 4,000. But in this case, it is also decreasing. So those two must also decrease as such. When you take your direct labor fixed cost, it is 10,000. So 10,000 minus the 2,000 give you 8,000 you are seeing over here. And you have a total direct labor cost of 44,000. So you subtract the 8,000 from the 44,000 divided by the 18,000, you get 2. So actual direct labor cost is 2. You do the same thing for the production overheads. We are being told that any change in output of 2,000 barrels should cause a change in the fixed production overheads by 4,000. Fixed production overheads is 40,000. So minus the 4,000 gives you the 36,000 you are seeing here. And production overheads total cost is 180,000. So I subtract the 36,000 from the 180,000 divided by the 18,000, you get 8. Selling and distribution, 27,000 divided by 18,000, you get 1.5. And so therefore, your actual variable cost is 23.5. So 36 minus 23.5, you get 12.5. The B part of the question was telling you that you should prepare a flexible budget for comparison for the month of December 2014. And so therefore, in an attempt to prepare the flexible budget, you have what you call so your flexible budget is going to look like this. Flexible budget for the month of December 2014 for an output level of 18,000 units. I think I've missed that one to put it there, so put it there. Flexible budget for the month of December for an output level of 18,000 units. Then you have your details column, you have your budget allowance column, and your budget allowance have a sub column of fixed cost, variable cost, and total cost. Then you have the actual cost, then you have the variance. Preparing the budget is started by revenue. So budgeted sales in the question was given as 600,000. Actual sales was given as 648,000. The variance is 48, a positive. Direct material cost, there was no fixed cost. So the direct material cost per unit that you had there to be 2 or to be 10, this one. You multiply it by the, now take note, we are multiplying all the direct material cost per unit here by the actual output of 18,000 units. So 10 here will be multiplied by 18,000, 2.5 will be multiplied by 18,000, 9 here will be multiplied by 18,000, 1 here will be multiplied by 18,000. By so doing, it means that you are flexing the budget. You are flexing the budget. So I multiply those ones by the 18,000 to get all the figures I'm seeing over here. 180,000, 45,000, 162,000, 18,000. I multiply them by it and I get this variable cost over here. Now take note, direct labor cost is now 8,000 and no more 10,000 because outputs have changed and we are flexing the budget. So you use 8,000 instead of 10,000. Production overheads, you are using 36,000 instead of 40,000, and I guess you know why already. Other fixed cost, when you look at the budgeted, it is 40,000. When you look at the actual, it is 36,000, and we are flexing the budget from budgeted to meet actual, and so therefore it is prudent that other fixed costs here should read 36,000 and not 40,000. Now, in an attempt to get the variance, it is not just the matter of subtracting budgeted from actual or actual from budgeted. You must know the merit of the items. Now, when you look at the items, for you to say there's a positive variance or a negative variance, it depends on the item. Revenue, you want to sell 600, you sell 648, it is in your favor, so it is positive. Direct material cost, you want to spend 180 and you spend 216, it is not in your favor, so it is negative. Direct labor cost, you want to spend 53 and you want to spend 44, it is in your favor, 9. Production overhead, you want to spend 198, you end up spending 180, it is in your favor, 18,000. Selling and distribution, you want to spend 18,000 and you end up spending 27,000. It is not in your favor. Other fixed costs, everything cleared, so it is 0. Now, to get the total cost here, what you do is to sum up from the direct material cost to the other fixed costs, you get all this total cost over here. So what it means is that for the variance, for you to know that whatever you are doing is right or wrong, when I add from this 36,000 to this 0 over here and I get 18,000, the difference between the 485,000 and then the 503,000 should give me 18,000 negative. If I don't get that, then it means that whatever I'm doing is wrong. Now, to get the budget profit or loss, it is the revenue minus the total cost. So the 600 minus this will give me that. The 648 minus this will give me this. So the difference between the 150 and then the 145 will give me 30,000. The same way, the revenue variance of 48,000 minus the negative variance cost of 18,000 should give me a positive 30,000 you are seeing over here. So once you are able to do this, then it means that you have successfully flexed the budget or you have successfully prepared a flexible budget for comparison for the month of December 2014 for an output level of 18,000 units. We'll not waste much time, we'll just proceed quickly to look at the question 2 or the illustration 2. Now, the illustration 2 or the question 2 reads, Furniture Limited provides you with the following extracts for its forecast for the 3 types of furniture it produces. So they produce Bite, Chew, and Joy. Now, you have the selling price, you have the raw materials they use in the production of this furniture. They use marble and wood, and they give you their cost and then the other details over there. Then they give you the maximum demand or the maximum outputs for each of the products, 2,000, 4,000, and 3,000. They are very, very important. Then there is an additional information. During the month ending February 2017, the supply of wood is estimated to be 46,000 tons, and you are required to determine the number of tons of marble and wood required per piece of furniture. Now, when you look at the question, we are being told that the cost per ton for marble is 30 Ghana cedis. The cost per ton for wood is 40 Ghana cedis over here. But the marble, we spend 180,000 to produce 1 bite, or we spend 180 Ghana cedis marble to produce a bite. We spend 120 on marble to produce 1 unit of chew. We spend 240 on marble to produce 1 unit of joy. So if we spend 180 Ghana cedis to produce 1 bite, and we know 1 ton is 30 Ghana cedis, then how many tons do we buy to produce, or how many tons do we need to produce 1 unit of bite? That is what the question is asking you now. So you divide the 180 by the 30, the 120 by the 30, the 240 by the 30 to get what they want you to do here. You do same for wood, 160 by the 40, 120 by the 40, 200 by the 40. So when you go to my solution here, illustration, that is the very first thing I did. The 180 over the 30, 120 over the 30, 240 over the 30, 160 over the 40, 120 over 40, 200 over 40. So this is what I call the number of tons of marble and wood required per piece of furniture. Yeah, hello, sir. Yes, sir. Then the question is also asking you that, is wood a constraint? If yes, show the computation. If no, show the computation. In an attempt to determine if wood is a constraint, you show the computation. So now we are being told that the available quantity of wood in the month is 46,000. That is the total quantity of wood available for the month of February, 46,000. And that is what you can use to do your production. Now, for us to see whether wood is a constraint or wood is going to be a challenge in the production of Bite, Chew, and Joy, we must know how many wood we need to produce the total quantity of bite we need for the month. We must know the quantity of wood we need to produce the total output of chew for the month. We must know the quantity of wood we need to produce all the output of joy for the month. Now, we are saying that for wood, when you want to produce bite, you need 4 to produce 1 bite. So if you want to produce 2,000 bites in a month, then you need 8,000 tons of wood. Chew, if you want to produce chew, you need 3 units of wood to produce 1 chew. And if you want to produce 4,000 units in a month, then 3 by the 4,000 should give you the total tons you need. The same thing applies to joy. So if I add all the tons I need for the month, I arrive at 35,000, meaning that the total quantity of wood I need to produce this total output of products for the month is 35,000, and I have 46,000, so I have more than enough. And so therefore, wood is not a constraint. Since the available tons is 46,000 and the quantity required for production is 35,000 tons, so wood in this case is not a constraint. The question went ahead and asked you for the B parts to show the contribution per piece of each wood. And you already know, if you cannot answer anything in this question, as for contribution, then you should be able to do it. Contribution is given as selling price minus variable cost per unit. Selling price is 680. You add the 2 variable costs over there, subtract from it, and then get the contribution per each product. The next question was asking you to find contribution per marble of each product. Now take note. The quantity required or the number of tons per marble is 6 for bites, 4 for chew, 8 for joy. And so if I want to find the contribution per marble, then I divide the contribution per each product by the contribution per that unit. So the 340 I had here divided by the unit 6 will give me 57. I think about 56.6667. I better run it up to 57. Chew is 320 divided by 4, give you 80. Joy is 560 divided by 8, give you 70. Then the next question is asking you that in what order are you going to produce these items? Or in what order are you going to arrange them? And we call this one the ranking. So you rank them from the highest to the lowest. Looking at this, the contribution of chew give me more profit than the others. So I need to produce chew first. I need to serve the customers of chew first, followed by joy, and then bite. Now, the question in the B part was telling you that the available quantity of marble for the month is 42,700. So it is telling you straight away in the B that As for marble, so if wood is not a constraint, then marble is a constraint. The company expects the supply of marble in February to be limited to 42,700 tons. No other resource is expected to be constrained, and the product data in A holds. So they are clearly telling you that marble is a constraint. So if marble is a constraint, the production decision we are going to take should be focused on marble, because marble is what will give us problem. Now, you prepare your production mix table, and this is how your production mix table looks like. So you have your products arranged here. You have the demand, you have the units, you have the total demand, you have the grand total. So now, each of the products have a minimum demand. They are saying that for chew, if you don't produce at all, produce to meet the minimum demand of 600 per month. Joy, if you don't produce at all, produce to meet the minimum demand of 500 per month. For Byte, if you don't produce at all, produce to meet the minimum demand of 400 per month. Given into consideration that you have 42,700 units of marble. So when you are starting, you start here, write a minimum demand 600. Come here, minimum demand 500. Come here, minimum demand 400. So this 1, 2, 3 must be produced first from the available 42,700 before anything else. Now, the unit per marble of ton is 4. So 600 by 4 give you 2,400 tons of marble you need for the minimum to satisfy the minimum demand of chew. 5 by 8 to give you 4,000 tons of marble to satisfy the minimum demand of joy. 400 by 6 will give you 2,400 to satisfy the minimum demand of byte. And so therefore, the total minimum demand tons I need is 2,400, 4,000, and 2,400, which is 8,800. So the minimum demand satisfaction tons I need is 8,800. So therefore, I subtract this 8,800 from the 42,700 as my working somewhere to see the next available tons I have, which is 33,900. Then I now come, I say additional production. For chew, I needed to produce a total of 4,000 for the month, and I already produced 600. So how much do I need to add on? 3,400. So 3,400 by 4. I need 13,600 tons. Can I get the 13,600 tons from here? Yes. Then I subtract from it. I get 2,300. So after this one, you have finished producing all the chew 4,000 for the month. So you needed a 16,000 tons of marble. You come to joy. I needed to produce 3,000. I already produced 500. How much do I need additional? 2,500. So I multiply the 25 by the 8. I need 20,000. Can I get the 20,000? Yes, because it is 2,300. So I give all the 20,000 additional to Joy. I finish producing the 3,000 over here, giving me 24,000 tons of marble. Then I come to Byte. Byte, I needed to produce an amount of 2,000, but the minimum demand, from the minimum demand, I was able to produce only 400, leaving 1,600. But the next available marble I have is 300 tons. And this 1,600, if I should multiply 1,600 by 6, I need 9,600, and I'm only having 300 over here. I cannot produce all that 1,600, and this is what we call the constraint, because you are going to run short at a point in time. So the 300 that is left, how many units of byte can I use to produce? I can use to produce only 50 units of byte. So it means that at the end of the month, byte, we can only produce 450 units, giving the 42,700 tons of marble that we have. So this is how you are going to prepare your table. And when you finish and you add everything here, it should sum up to the 42,700. So I will not waste much time. I will not delay much time here. We'll meet face to face and I'll explain it into details, but this one is purposely meant for you to be able to do your assignment and get it done. I wish you good nights and keep learning, and we'll meet again. Thank you. If you have not subscribed to the channel, please make sure you subscribe to the channel so that whatever video I post, you'll get known and see it anytime you log on to YouTube. Thank you.